Both technical and fundamental Forex traders will zone in on areas of support and resistance. However, using the guidelines of the wave principle, we can gain an edge on the probability of such areas remaining intact or not. In front of you is a monthly chart of the Australian dollar against the US dollar, also known as Aussie. Taking a look at the decline from July 2011, it's not difficult to see the areas that are resistance within that downtrend. But take a closer look at the rallies into each of these areas, and you will see that the price action is corrective. It's overlapping and often comprises of just 3 waves. The wave principle defines corrective price action as that unfolding against the trend. Now take a look at this year's advance to see that Aussie is currently testing the first area of significant resistance within that previous downtrend, just above 0.80. So far, the price action up from the March low is very impulsive in nature. And if we look at the previous downtrend, we see that the down moves were very impulsive and that the rallies were corrective. So under this scenario, we now have an impulsive rise testing the first area of resistance. And it's great the way that we can describe price action into these areas with the knowledge of the wave principle. So if we now move on to a weekly chart, we can see more detail of that advance up to the February 2021 peak. And it is quite impulsive in nature, and you can see that price action has pulled back now to the 75.33 area. But it's worth noting that the pullback from the peak is in 3 waves, and the rally from 75.33 itself looks corrective. If we zone in on the price action even another bit and go down to a daily range chart, we can see more detail of the price action, and this is where it starts to really get interesting. If we look at the pullback from 0.8007, it has unfolded in a corrective manner, and we can label it in 3 waves. The rally up from 0.7533 also unfolded in 3 waves, and this is now where the price action really gets interesting from our perspective. So far, the price action unfolding from 0.7892 is also quite corrective in nature. So if we take our knowledge of the wave principle that suggests 3-wave patterns are counter trend moves, we can now favour that Aussie is actually in a correction and is setting up for higher. So at this juncture, we decide what pattern is likely unfolding. So the clue now is in the detail of the pattern. We know that triangles consist of back-to-back corrective patterns, and here in Aussie we can see that the price action so far is unfolding in a very corrective manner. And while we need to wait for more price action to complete a triangle pattern, we can gather an awful lot of information to prepare us for a possible upcoming breakout trade in the Aussie US dollar pair. So over the coming weeks, we will be paying close attention to the key level at 0.7533 and watching to see what pattern develops and if this year's strong uptrend manages to take out the resistance area at that 80 handle. We are often fooled into thinking that trading is all about the excitement of the price action unfolding and taking numerous amount of trades. But one of the best pieces of advice that I have taken on board over the last number of years is that we as traders are often paid to wait. So while we might gain great returns on certain trades, it's not the quantity of trades that may result in your success, but more about the quality, and that can often come about with patience. So I'll be using my patience over the coming weeks to watch Aussie US dollar, and if we do get a triangle pattern, the resolution from the patterns are always worth the wait.